And then China.
Yeah, this is a big topic, right? I mean, I like to call it the Sino schism in a sense, right? Which is this divergence between the West, U.S. prominently, and China in a sense. They're going on diverging paths. It's not just related to trade, but it's what's happening with the advent of emerging tech.
Huawei.
Absolutely,
Right.
5G, and who's going to take the ascendancy in the East-South China Seas. Those sorts of things are going to lead to this divisiveness between China and the West, U.S. most prominently, right? And where are other countries going to follow? Are they going to follow the U.S. or are they going to follow China? This is a big theme, right? It's going to be an enduring theme. It goes beyond, short-term trade spats, right? It's a much more enduring rivalry, so to speak, between the U.S. West and China. Part of that manifestation is going to be how China manages its own economy, right? And of course, we know that it's shifting towards more domestic consumption as opposed to fixed asset investment. It's really hard to get off of that. We've seen actually China relevering, not delevering, right, over the last few years. So it's going to be a hard shift for them to make. The growth is going to slow there. It's going to increase social tensions, I believe. That's the most important aspect for the leadership in China to be mindful of is moderating any social tension rather than the economy itself. So I think China has the levers to manage through that, right? It's a relatively closed economy, and I think China will do well to manage that. I also think that China is going to be much more assertive in managing its debt, the buildup of debt, and there are ways to get around that. They've done that in the past, and I think they'll do that in the future. So I'm not as concerned about this buildup of debt in China as other people are. They'll address it in I think relatively unique ways, right? So it's not as much of a problem.
So it sounds kind of like because you don't think that there is a crisis, so to speak, coming to China, and because it's been picked over by so many people, because it's the elephant in the room in emerging markets, it's not really a sexy place to make a relative value call.
No, it's not. It's not really. I mean, it's kind of a muddle through. Think about it as muddle through. Growth in China is probably going to be below 6% now. Whoop-de-doo. I mean, so what? People were saying, oh, the hard landing to China is going to be going from 12% growth to 6% growth. No, they're managing it reasonably well. I mean, yeah, it's a little bumpy, right? But in general, they're going to manage it relatively well. I think the
coronavirus.
Yeah, I think that's an issue, right? For not just for China, but for the rest of the world. And we're seeing, markets responding to that. We'll see how that plays out. Hopefully, like the SARS scare, it becomes contained, right? We'll have to see. But I think the issue for China is more about social, maintaining social cohesion and stability. That's really the issue for China. Right. It's not about the economy, right? For the global markets, it's about social stability. It's not about the economy, right? I know that sounds strange, but to me, a hard landing in China isn't about the economy. It's about the social stability, right?
Right.
And that's, I think, in the minds of the leadership as well. So I don't necessarily see an imminent economic crisis in China at all. They have the tools, the wherewithal to address that. So the issue is more about the repercussions of the slowing in China growth, right? Which is, of course, affecting EMs, which were heavily reliant on China. Yes. Europe, to some extent, right, as well, which is suffering from that slowdown. So the world economy in general is taking a notch down in terms of growth conditions and needs to find ways to offset that.
If you're ready to go beyond the interview, make sure you visit realvision.com, where you can try Real Vision Plus for 30 days for just $1. We'll see you next time right here on Real Vision.